Li Lu owns 8 stocks reported in his Himalayan Capital portfolio on his 13F worth $3.17 billion. In this video, we're covering his 8 biggest positions, starting with his newest stock buy, Occidental Petroleum. Right now, Occidental makes up 3.6% of Lu's portfolio, and he bought this in the last quarter. Oxy's owned by 4 super investors, and this is led by Prem Watsa, who has 32% of his Fairfax portfolio in the business. For Warren Buffett, who's the biggest shareholder and owns more than 30% of the company, it makes up just under 6% of his US listed assets. Today, Occidental, which trades under stock ticker Oxy, is a $50 billion oil and gas company that's trading just $4 above its 52-week low. Occidental nearly went bankrupt during the pandemic after its deal to acquire Anadarko Petroleum back in 2019. This is how Buffett first entered the business, and it was largely because of these assets that the company stayed afloat. Since then, they rebounded strongly, and in 2022, they were the top performing stock in the S&P 500. Today, Occidental is in the process of growing their business even farther through the acquisition of Crown Rock, which it expects to pay $12 billion for. Unlike other recent oil and gas acquisitions, this is being paid for mostly in cash instead of stock. The thesis for Oxy largely comes down to capital allocation. The company's not reinvesting nearly at the same levels of capex that it had in the previous decade, and it's using most of its cash flows to return these to shareholders. Notably, they've done this in a few ways. First, they've significantly cut their debt since that Anadarko acquisition. Next, they've been buying back shares in the last couple of years. In addition, today they pay a 1.7% dividend yield, and they grew this by 25% last year alone. Occidental seems to trade below its projected free cash flows and where it has historically. Still, a guru focus value for the company only comes in at $55 per share, which is just up $4 from their current stock price. Their cash flow numbers look a lot better, with as much as a 60% upside and an $86 current fair value, though this doesn't account for a lot of the cycles we see in the oil and gas industry. Analysts are very bullish on the company as well, with a $69 target price and a 28% upside. Li Lu's a value investor who founded the hedge fund Himalayan Capital and has $20 billion of assets under management. He was born in China but lives in the United States, where he studied at Columbia University. It was here that he first discovered investing by attending a lecture from Warren Buffett, which inspired him to buy his first stocks. Charlie Munger said that Li Lu was the only outside investor he ever trusted with his money. Li Lu rewarded this trust by making Munger more than $500 million. There were rumors that Li Lu would take over Warren Buffett's position at Berkshire Hathaway once Buffett stepped down, but in 2010, he withdrew himself from consideration for the job. Next, at number 6, we have Apple. This makes up 6.25% of Li Lu's US listed assets. Here again, we see big overlap with Warren Buffett, who has 30% of Berkshire's US assets invested into Apple. This comes even as Buffett cut his Apple position by half in the last quarter alone. Despite Buffett's sales, Apple's been trending higher and it's trading for all-time highs. Today, it's owned by 18 different super investors. Apple is the largest company in the world with nearly a $3.5 trillion market cap, and it's trading just $3 below its all-time and 52-week highs. Apple's perhaps the top performing stock of all time, and in the last decade, they've completely crushed the market. In that time, there's been a lot to like in the company's numbers, where they earned very high returns on capital and generated a ton of free cash flow amidst growing sales. However, today, they have some lofty valuations and their sales seem to have about flatlined. The real draw to Apple for Warren Buffett was they were returning most of this cash flow to shareholders again as both dividends and buybacks. Apple's reduced their share count from 251 million in 2013 down to 155 million in 2023. While it's not always thought of like this, Apple's actually a dividend growth stock as well. They've grown their dividends 12 years in a row. Today, they just pay a modest 0.43% dividend yield, but they did grow this by 4% last year. Apple's a wonderful business, which is reflected in their numbers. However, their valuations are where the company can get into trouble. It's not enough just to know that something's wonderful, you also have to understand its fair value. Today, Apple's trading way ahead of all of their previous historical valuations. That's largely why a GF value for the company only comes in at $185 per share. That's roughly where Buffett was selling earlier in 2024, and as Apple's climbed higher than this, he may have continued his sales. At this point, Apple's free cash flow numbers support a 34% downside and a $152 fair value. Still, analysts are forever bullish on the company even with Buffett selling, and they have a 17.5% upside and a $272 target price. Want to support Global Value? Click the link to check out Interactive Brokers, our broker affiliate. Even by just clicking the link to check out their site, you support the channel. The next stock on our list at number 6 was Lilu's most recent buy until Occidental. This is East West Bancorp, the only US bank that has a Chinese banking license. Lilu's the only super investor with the holding in the company, and it makes up nearly 8% of his 13F assets. East West is a $12 billion California-based bank that today is trading at its 52-week highs. Lilu originally invested in this company back in 2013 amid the other regional bank failures. East West has been a strong performer in their stock a couple different times in their period, first from the late 90s until the early 2000s, then again from the global financial crisis until more recently. The numbers show pretty consistent growth and strong earnings power that has increased since the pandemic. The thing to watch out for as a bank is that they've doubled their assets in the last decade as well. Thankfully, the company has median returns that are better than their earning assets growth in the past 10 years. Added to this, East West returns capital to shareholders through a 2.42% dividend yield and around a 3% shareholder yield overall. Today, the analyst target for the price is up around 3.5% and it comes in at $92.50 per share. Today, East West trades around its historical sales and gram number valuations. This is even as a GF value for the company comes in at $75 per share. That's down $15 from their current stock price. Lilu's investment portfolio showcases a strategic selection of companies. The top 5 stocks that we're about to look at reflect Lilu's conviction in leading financial service and technology holdings that are well within his circle of competence. The stock in Lilu's portfolio is Berkshire Hathaway Class B shares. These are owned by 19 different super investors, and that's led by Guy Spear and the Bill and Melinda Gates Foundation Trust, who both have 21% positions in the company. In the case of Lilu, this makes up 14% of his 13F assets. Berkshire mirrors Lilu's admiration for Warren Buffett's approach to investing. It has a diverse array of subsidiaries, insurance companies, and stock investments that both offer stability and the potential for price appreciation. Since Warren Buffett took over the company in 1965, Berkshire is the best performing stock in the market. With so many different companies under their umbrella, it's hard to get a good sense of Berkshire by looking at their GAAP numbers. We can see a few things though. One is that their sales and cash flows have steadily marched upward for most of this time. Their net incomes are thrown off based on accounting changes back in 2018 that make the company report its net swings in their equity portfolio. Notoriously, Berkshire doesn't pay dividends. Still, in recent years, shareholders have benefited through share buybacks. In the last 5 years, Warren Buffett's repurchased more than 10% of their shares outstanding alone. Notably, in 2024, he's really slowed the pace of these buybacks. This corresponds with Berkshire trading at ever higher prices and valuations, which may look to be stretched compared to their historical numbers. Still, there's a lot of momentum in Berkshire businesses, and that's why their cash flows suggest an upside of 12% from here and a $455 target price. Next, at stocks number 3 and 4 in Lilu's portfolio, we actually get a 2-for-1. He owns Alphabet's GOOG and GOOGL shares. Together, this is actually a $1 billion holding, and it would be the biggest stock that we can see in his portfolio. Alphabet's owned by 33 different super investors overall, and it's the number 1 super investor owned stock. With the GOOG shares, he has 21.8% of his listed 13F assets. And in Alphabet's GOOGL shares, Lilu also leads the way, with this making up 18% of his US portfolio. These big stakes in the tech giant signal Lilu's strong belief in Alphabet's enduring strength and leadership in the global web search market. The difference between these shares is the voting rights that come with the Class A shares, which the C shares don't have. Otherwise, they have the same economic rights. The search giant and owner of YouTube is a $2 trillion business that's trading just $30 below its 52-week and all-time highs today. From its initial public offering, Alphabet has been one of the top-performing stocks of the past 2 decades. Their numbers have shown strong growth in their sales, earnings, and cash flows over this time, and Alphabet has one of the largest cash piles of any company in the world. They also earn consistently high returns on capital. Even better for value investors like Lou, they've started returning capital to their shareholders. This started in 2019 through share buybacks that have continued in each year since then. For the first time in company history, in 2024, Alphabet started their dividend. Today, this is just a modest 0.48% dividend yield, but with their buybacks, they have a decent 3% shareholder yield overall. Compared to some of the other tech giants which have seen more stretched valuations recently, Alphabet looks like it's trading more in line with its historical valuations. This appears to be the case as we consider their GF value comes in at $161 per share, pretty close to their current stock price. Still, their cash flows project an upside as high as 31%. And analysts are pretty bullish on the company with a 21% upside and a $200 price target. Next, it's time for Lilu's second biggest stock. This is a secret holding that doesn't show up on his 13F. In fact, we can only see he owns this business through the company's annual reports. Postal Savings Bank of China makes up 19% of the portfolio that we can see Lilu owns. This company is one of the largest banking franchises in China and it's focused more on rural areas. They rebounded sharply from the pandemic and then have fallen in the past couple of years, though 2024 has been a much higher performing year for the stock. Like the other bank stock that we just looked at, Postal Savings has demonstrated strong and growing earnings throughout the last decade. Unlike Bank of America, however, they have diluted shareholders in a handful of years over this period, issuing almost as much as 8% of shares in 2023 alone. Still, they do return lots of capital to shareholders, and even today they have a 6.1% dividend yield. Compared to their past, it looks like this company could be trading very cheap. They're trading for less than half of tangible book and well below their Graham number or Peter Lynch value, based on their earnings. That's especially important as the company even earns above average returns on equity for a bank. These valuations could look very cheap compared to this. Still, this is a foreign listed stock for most investors, and you'd need to be an expert in Chinese banking to truly understand it. Today, its Hong Kong traded shares have a GF value that's 21% higher from their current stock price. Now it's time for the top stock in Lilu's portfolio. This is his largest 13F holding, and it's the biggest company we can see that he owns. It's Bank of America. He's the largest super investor as a percentage of his portfolio, and this company's owned by 13 others. Notably, this was 15% of Warren Buffett's portfolio, and he owned 13% of the business until July when he started selling. Now he's down to under 10%. Here again, we see a lot of overlap between Lilu and Warren Buffett. Bank of America is one of the leading financial institutions in the United States, and today it's trading just $2 below its 52-week high. It's a $325 billion company. In the past, this was a top performer from the late 1970s until just prior to the global financial crisis. Then the bottom almost fell out for the company during that time. Their current CEO Brian Moynihan came in around that time and re-engineered a huge turnaround at the company. From under a $5 low during the global financial crisis, Bank of America's stock is up more than 8 times. Their numbers showcase steady earnings for the business in the last handful of years, though the business's earnings may decline with lower yielding long-term held-to-maturity assets. One thing both Buffett and Liu seem to like about this company is their returning capital to shareholders. That appears to be a common theme throughout most of these businesses. Bank of America's bought back shares in more years than not in the past decade. Also, right now, they pay an above-average 2.42% dividend yield, and they're a dividend growth stock, increasing these for 10 years in a row. Last year, they grew their dividend by 8.9%, and they have a 5% shareholder yield overall. Even with Buffett's recent sales, Bank of America only seems to be trading slightly ahead of their median price to sales and their Graham number today. Still, their GF value only comes in at $38.50 per share, slightly under their current stock price. The analysts covering the business are much more bullish with a $54 target price and a 27% upside. Now, these are the top 8 stocks we can see in Lilu's portfolio. Remember, this only accounts for $3.1 billion of his $20 billion under management. Of these companies, which is the one you're most interested in? Let me know in the comments below.